Good morning. Thank you for joining us today. We're going to go over some solo 401k eligibility rules, and then I will be answering some of your questions here on the live chat. That being said, today's webinar is for informational purposes. We're not providing investment advice or legal advice. As always, you can also join our community, my solo401k.net/my community. You're free to join. You don't have to be an actual client to join. Let me send over the link to our community where we have over 30,000 members. There's a large video catalog there. There are also forums where we're constantly replying to questions and answers on those forum pages. And we also have a section there where a lot of advisors will post information, blog posts regarding not only 401k plans, but planning, and whether it's estate planning or retirement planning articles. Don't forget to also check our artificial intelligence page on our website. The domain is www.solo401k.ai. Let me send over a link to that page now as well. So let's talk about the solo 401k features. So how can a solo 401k plan benefit you? So the plan documents for the solo 401k plan are prepared the same day, and then the accounts can be opened and funded same day, depending on which brokerage firm you use. Of course, during the busy months, it could take a little bit longer, especially those clients that opened accounts with us at the end of December of last year. Those accounts are already effective for 2024. Therefore, the bank accounts and the EIN number can be obtained here in 2025. And you're still going to be able to make employee and employer contributions here in 2025 for 2024. But any new client that opens up a plan here in 2025, they're going to have plenty of time to open up the bank or brokerage accounts as well and make contributions for 2025 this year or next year in 2026 by your business tax return due date plus timely filed extension. So a solo 401k is a good way to reduce your taxable income by making pre-tax contributions. You can also make Roth solo 401k contributions, resulting in tax-free growth, as those Roth solo 401k funds will grow tax-free. You also have flexible contribution options, meaning you can choose to make just pre-tax contributions or solely Roth contributions, solely voluntary after-tax contributions, or a combination of all three. And you're also allowed to make catch-up contributions to the solo 401k. That's one of the great benefits of a solo 401k over a SIP IRA is the high catch-up contribution amount, which is $7,500 for tax year 2025. It remained the same in 2024 as well. One interesting feature for 2025 plans and going forward is the super catch-up contribution as part of Secure 2.0. Those that are age 60 through 63 can now make a catch-up contribution of $11,250 instead of the standard $7,500 catch-up. Those that are age 50 to 59, you can still do the $7,500 catch-up, but the super catch-up is a feature available to those age 60, 61, 62, or 63 in 2025. And that catch-up increases from $7,500 to $11,250. Here's a link to that catch-up, the new catch-up provision. Let me see. So there's that link there. You can take a look at it there while I keep going through these slides here. So So with the solo 401k plan, you can also maximize savings because the plan that we offer does come with the auto contribution tax credit. And you're not required to contribute in order to qualify for that auto contribution credit. As a matter of fact, we have a good article that was featured in a website called the White Coat Investor regarding that auto contribution credit and how it's available for both new clients as well as existing client. If you're an existing client and open the solo 401k plan with us prior to December of 2023, your plan would need to be amended to add that auto contribution credit. So you would need to let us know so that we can amend your plan for that auto contribution credit. And let me pull up some information here that deals with information comparing the auto contribution credit versus the tax credit, because there's a difference between the two, and there's a lot of confusion in the industry regarding both of them, as only the auto contribution credit applies to solo 401k plans. And this link I'm going to send over does a good job of comparing the two. There it is right there. Take a look at that while we keep moving through these slides here. Also with the solo 401k plan, it's a self-directed solo 401k plan, which means that you can virtually invest in any investment that you would prefer. Of course, there are certain investments that are disallowed, such as collectibles, works of art, alcoholic beverages. Those are all disallowed, but virtually all other investment is allowed, whether we're talking about traditional investments such as equities, that is exchange traded funds, stocks, to mutual funds, to even CDs, so certificates of deposit, and even bonds and money market funds, to alternative investments such as private stock, cryptocurrency, precious metals, real estate, notes, tax liens, and so forth. And a solo 401k can also be easy to use with respect to making contributions, annual contributions. You can do those through payroll, whether you use Gusto or ADP. You don't have to use a payroll provider. You can simply make contributions directly from the solo 401k bank, from the business bank account, by linking that business bank account to the Fidelity brokerage account. If you decide to use Fidelity, for example, for the solo 401k that we offer. It can also be opened at Schwab as well, if you want to use Schwab to hold the solo 401k funds. Of course, with the solo 401k plan, you can also take a participant loan. You can borrow from the plan for any purpose, and there's no credit check. You can borrow up to 50% of the total balance, not to exceed $50,000. Therefore, if you want to borrow the full $50,000, you're going to need at least $100,000 value in your plan with $50,000 of liquid funds. Let me send more information regarding the solo 401k participant loan rules, and we prepare those loan documents as part of our ongoing support for no additional fee. So the fee to set up a solo 401k with our company is a total of $650 for the first 12 months. Therefore, anyone that sets up a plan here in 2025 would pay $650. That's $525 for the plan documents plus $125 for the first 12 months of plan provider fees, which also includes compliance support at no additional charge. We also have a lot of good educational services on our website, not only our website, but also our community, as well as our artificial intelligence page. Let's talk about solo 401k eligibility. Who is eligible to set up a solo 401k plan? A solo 401k plan is for owner-only businesses with no full-time non-owner W-2 employees, so common law employees. Therefore, if you have any W-2 employee that works less than 1,000 hours, you qualify for the solo 401k plan. On the other hand, if you have a full-time W-2 employee that works 1,000 hours or more and they are not your spouse or an owner in the business, you would not qualify for a solo 401k plan. The spouses of the of the owner of the business also qualify for the solo 401k plan. Some eligibility items to consider when opening a solo 401k plan is that it doesn't have to be a formal entity such as an LLC or an S corporation. You can be a sole proprietorship, so a contractor, to open a solo 401k plan. As far as self-employment income, you do need to be performing material services in the year that you open a solo 401k plan, and then report that self-employment income on your tax return to the IRS. Let me send over a link to our website to the solo 401k eligibility checklist, which has more detailed information. The solo 401k plan will require its own EIN number. I know the IRS website was down at the end of December, so any client that signed up with this in December will be obtaining that EIN number for the plan here in January, now that the EIN system is back up. But the EIN number is specific to the plan. You cannot use your business EIN or your social. And that EIN is important because it's going to be used for reporting under the plan, such as Form 1099-R distribution, or for reporting conversions, such as the Mega Backdoor Solo 401k conversion. And is also used when opening the holding accounts for the Solo 401k plan. That is the bank and or the brokerage accounts under the plan. Now, you can also participate in a daytime employer 401k and also a solo 401k if you have a side business. So you can open a solo 401k for your side business and also maximize contributions to that solo 401k plan. For example, you can maximize the voluntary after-tax contribution to that solo 401k, irrespective of you also maximizing contributions to your daytime employer 401k. Therefore, you can really supercharge your retirement savings by making a voluntary after-tax contribution of $69,000 for 2024 or $70,000 for 2025, for example, and then immediately convert that over to the Roth Solo 401k or the Roth IRA. Let's see if I can locate that checklist here. So here's the checklist that talks about the eligibility requirements for opening a solo 401k and frequent questions there as well. All right, let's keep moving on here. So I sent information about the super catch-up contribution already, so we're not going to go over that today, but I did send a link over earlier that talks about that new super catch-up contribution. We can go into that type of information in more detail in a separate webinar. We do have a recording on that webinar as well that we did previously last year. And here's the information I sent earlier regarding that super catch-up contribution. And there's a YouTube link on this page that covers the specific super catch-up. Now for tax year 2025, the contribution limits are $70,000 plus a $7,500 catch-up for those age 50 or older. Or instead of the $7,500 catch-up, you can do $11,250 catch-up if you're age 60, 61, 62, or 63. That's part of the super catch-up. Of course, for 2024, the contribution limit is $69,000 plus that $7,500 catch-up for those age 50 or older. And you have until your business tax return due date here in 2025 to open the bank accounts, brokerage accounts, and make employee and employer contributions for anyone that set up a plan with us at the end of 2024 or any time in 2024. Now, if you open up a solo 401k plan for the first time in 2025, you're still going to be able to make both employer profit sharing, you're going to be able to make both employer profit sharing contributions as well as voluntary after-tax contributions for 2024. If you're an S Corp or a partnership, for instance. If you're a sole proprietorship or an LLC taxed as a sole proprietorship, you can still open a solo 401k plan here in 2025 for 2024, and you're going to be able to make contributions, both employee and employer, whether it's pre-tax or Roth and voluntary after-tax contributions by April 15 of this year. Now, if you open the plan already by the end of December, that is, you signed the plan documents. That's all you had to do was sign the plan documents by the end of December. Then your plan is already effective for 2024, and you're going to be able to make all three contribution types, not only in 2025 for 2024 by your business tax return due date, but you'll also be able to make them by the extended deadline if you file a timely extension for your business tax return. Okay, let's keep moving on here. So that goes over what I wanted to go over today regarding these features. Again, you can follow the conversation more on our community, which is mysolo401k.net/my-community/forums. With that being said, let's move over to some questions here. So here's an interesting one from Richard. I submitted my solo 401k docs December and I received my EIN. The next day, on December 31st, I decided to open my trust bank account, but my EIN number did not exactly match the trust doc. An attorney correct the trust doc to satisfy my bank, and I was able to fund the account. Will the other docs that your company initially drafted need to be corrected? Possibly. We can update the document. Send an email to business@mysolo401k.net. On the subject line, put follow up to webinar, and also put down, list your name and your plan number, excuse me, and your plan name. So list your plan name, your name, daily webinar, and a subject line, and we'll take a look at that. All right, let's move on to the next question here. My trust name is, okay, well, yeah. So the IRS does not allow you to use special characters when obtaining the EIN number for the solo 401k plan. So it's fine the way the EIN number reflects, as the semicolon or the colon is not required to be listed, nor does the IRS allow it to be listed on the EIN letter. So it's still okay because the plan name is still the same. It has that colon, but that's not going to create any issues. So no issue at all. Same thing for just for future knowledge. If you name your solo 401k and you add the word "the," so let's say you call it the Rainy Retirement Trust, and we go get the EIN number, the IRS will not allow you to use "the" when obtaining the EIN number. They'll just list everything after the word "the." So it would be Rainy Retirement Trust. But that's still okay if the plan name has the word "the" and the EIN number has that omitted. There's no issue there. Okay, looks like we got Richard here saying hello. Hello to you too, Richard. Let's see here. We got another question here. Dual employee plus six-figure 1099 income. Job 1 has 401k. For job 2, employee deferral is in 457. Employer match is 403B. My understanding is that the job W-2 457 can defer a maximum of $23,500. For job 401k, for solo K, I can contribute the output of 70,000 minus 23,500 403B match amount. Is this correct, or do I have the full 70,000 limit for solo 401k? Good questions here. A lot of questions packed here, but that's all good. So it looks like your illustration appears to be correct, but let's break it down here. So one, when making contributions to a solo 401k plan, you've got that whole 403b exception, meaning that the 403b contributions are going to impact the amount of solo 401k contributions that you can make. So if we're talking about the 2025 solo 401k contribution limits, which is $70,000, that's the overall limit, and you already contributed $23,500 to your 403b plan here in 2025, or you will be, then you are correct. You're going to have to subtract that 23,500 contribution from that 70,000 overall solo 401k contribution limit, so you won't be able to contribute the full 70,000. However, contributions to a 457B are not impacted, or those contributions do not impact your contributions to a solo 401k plan. So even if you contributed the full $70,000 to your 457B plan, you would still be able to contribute an additional $70,000 to your solo 401k plan. Of course, it would need to be based on your net self-employment income from the self-employed business that sponsors your solo 401k. Let me send over a link that talks about contributing to multiple 401k plans, but that's a good question. So in review, any contribution made to a 457B plan is not going to impact your contributions made to your solo 401k plan. However, those contributions that you've made to your daytime employer 403B plan will impact your contributions to the solo 401k plan. So let me send over the link here that talks about contributing to multiple retirement plans and what those rules are. Now, keep in mind that also applies to voluntary after-tax contributions to the solo 401k. If you're also contributing to that 403B plan, you're going to have to reduce any contribution to that 403B plan from the $70,000 overall solo 401k contribution limit. Where is that darn link here? Give me a moment here while I pull that up here. All right. Here, wait a minute. Contributions. Here it is. Let me copy this link and send it over. Well, I thought I found it. Where is it at here? Just give me a moment here. Here it is. Contribute to multiple retirement plans. All right, here's the link to that page. I'll put it on the screen there in case you don't see it. So there it is. You can also get to that link by going to our contribution page. So let's move on to the next question here. All right, so got a question here from Nicholas Brown. Crypto trading is mentioned. I can open an account under the name EIN of the 401k trust on an exchange. To trade, I need to move funds to an exchange for buying and selling, while withdrawing from a 401k is taxable with penalties. Or is this prevented since the account is under the name EIN of the trust and considered the same, meaning I can move funds back and forth? Great question. So no, it's not considered a distribution. Reason being is that the solo 401k bank account is opened up in the name of the solo 401k using the solo 401k EIN number. Same thing with the account at the exchange. That needs to be opened up in the name of the solo 401k using the EIN number for the solo 401k. Subsequently, funds are wired from the solo 401k bank account directly to that cryptocurrency exchange account, also in the name of the solo 401k. Therefore, it's not a distribution because the funds are not flowing to your personal bank account. If the funds were flowing from the solo 401k bank account to your personal bank account or a crypto account in your personal name, that would be considered a taxable distribution, resulting in not only the payment of federal taxes and possibly state taxes, depending on your state of residence, but also a 10% penalty if you're under age 59 and a half. But in short, there's no tax reporting here as long as you follow what I just mentioned there. That is, the crypto exchange account is opened up in the name of the solo 401k plan, and the funds flow directly from the solo 401k bank account to the crypto exchange account. All right, let's look at another question here. All right, here we go. I've asked for following two items to the two accounts team, what would the ETA for this be? Paperwork to open a bank account. Already have my solo 401k accounts with Fidelity. What documentation, tax paperwork do I need to get the $1,500 tax credit? So thanks for your patience. During this time of year, after the December 31st rush, we're backlogged on all the requests to open up bank accounts and so forth, but we're plowing through that as quickly as possible. So we'll go ahead and make sure to follow up either today or by tomorrow with the information to open up the bank account. And if you want, you can also send me an email to business@mysolo401k.net. Put your name on the subject line, put webinar and the plan name, and we'll make sure to get to that ASAP. Again, we're plowing through a lot of requests right now due to the end of the year rush. Thanks for your patience. With respect to the $1,500 auto contribution credit, you're going to be able to claim that credit starting with your 2024 tax return that's going to be due this year, and you'll also be able to claim it for 2025 and 2026. You're going to be able to claim that on Form 8881. That's the form used for that. We also have a walkthrough how to fill out that form. It's a video walkthrough and a PowerPoint. So ask for that when you send that email, and we'll make sure to provide that to you as well. Okay. If I trade frequently cryptos and other securities in a Roth solo, will I be subject to any taxes? Yes, I do not withdraw any of the funds. So no, there's no, as long as you're doing the trading within that crypto account and it was opened up in the name of the solo 401k plan, those funds will stay, the funds in the crypto will stay within that account, and it'll continue to maintain its tax shelter status. So as long as you don't distribute those funds out of the crypto account to your personal account, there won't be any distribution issues, nor any type of reporting with regards to that trading, because that's all happening inside a tax shelter vehicle that is the solo 401k plan. And of course, if you're doing it inside a Roth solo 401k that was opened at the exchange in the name of the Roth solo 401k, those funds are going to grow tax-free because it's a Roth solo 401k. Whereas if it was a pre-tax solo 401k, they're going to grow on a tax-deferred basis, meaning you're going to pay taxes once distributions commence. Another question here, for multi-members LLC, is it a single plan sponsored by the LLC? Of each partner needs to open its own separate solo 401k according to his self-employment income. So if we're talking about one LLC that has multiple members and the LLC is taxed as a partnership, then it's just one plan because the plan is sponsored by the LLC and the partners are participants in the plan. So one plan, but multiple holding accounts. So each participant is required to have separate holding accounts under the plan to hold their respective pre-tax funds, Roth funds, and voluntary after-tax funds. So if we're talking about a two-member LLC, a self-employed LLC, that would be a total of 6 different holding accounts, 3 for each participant, but it's still considered one plan. So hopefully that answers that question. All right. Could you please talk about the pro rata rule if it affects solo 401k? I have 2 SEP IRAs and 2 Roth IRAs at 2 different brokerages, and also have a 401k with pre-tax and Roth. I was in the impression to avoid the pro rata rule, I have to combine all those accounts into one solo 401k plan. But I found out the Roth IRAs can roll into a solo 401k. Do I need to roll other 2 SEP IRAs into a solo 401k to avoid the pro rata rule? It appears that you're talking about the pro rata rule as it applies to the conversion of IRA funds, which is common with what's called the backdoor Roth IRA, where your income is too high, so you don't make Roth IRA contributions, but rather you make a non-deductible IRA contribution and subsequently convert that IRA contribution to a Roth IRA. So that's different, of course, than the Mega Backdoor Roth Solo 401k. So if you're trying to do a backdoor Roth IRA, then yes, you're going to have to somehow isolate all your IRA funds by transferring your SEP IRA, even your simple IRA. If you qualify, if you've had it for 2 years, you can transfer that SEP IRA and that simple IRA, as well as any traditional IRA funds. You can transfer all those to the solo 401k pre-tax bucket. And now you will have isolated your non-deductible IRA so that you can then convert the non-deductible IRA to the Roth IRA. Lastly, you are correct. You're not allowed to transfer a Roth IRA to a 401k, including a solo 401k. That's a Roth IRA regulation. It's not a solo 401k regulation. Let me send over a link that talks about that restriction of not being able to transfer a Roth IRA to a solo 401k. But again, don't get confused with the Mega Backdoor Roth Solo 401k conversion rules and the Backdoor Roth IRA conversion rules. That's like talking apples and oranges. They're different. So where's that Roth IRA? Here we go, the Roth IRA transfer restriction. Okay, let's see what else we have going on here. All right, here's another question here. In-kind transfer my entire SEP IRA account to pre-tax solo 401k. Both accounts were with Fidelity. What paperwork do I need to provide to your organization to ensure that it is not treated as a distribution by Fidelity? Fidelity rep stated that they have no insight into non-prototype accounts. I need to check with you. That's exactly right. For clients that use Fidelity to hold the solo 401k funds for the plan that we offer, you need to come to us for questions regarding the solo 401k, because remember, all Fidelity is doing is holding the funds. In other words, you did not open a solo 401k with Fidelity. Therefore, that's why you have us as the plan document provider. As long as you continue to fall under a plan document, you will be able to use our compliance support because we're the plan document provider. Hence why we have a very low annual fee of $125, which kind of reminds me of some clients that come back and say, why are you charging me $125 a year? Well, number one, it's only $125, so I don't understand why you're even bringing that up. Number two, the $125 is for being the solo 401k plan document provider. You are required to have a solo 401k document provider in order to have a solo 401k. And we also provide compliance support under that inexpensive fee of $125. But not to go on a rampant here. So to finish answering your question, as long as you had us prepare that SEP IRA transfer form to move that SEP IRA at Fidelity internally to that solo 401k, we would have completed it so that it's reported as a non-taxable direct rollover. Now, Fidelity is the one that's going to issue a 1099-R for that SEP IRA because they are the ones that are moving the SEP IRA. So they have to issue the 1099-R, and they're going to use the code G in box number 7, which communicates to the IRS that the funds were transferred from a SEP IRA directly to the solo 401k. So it appears that the funds and or securities were transferred internally within Fidelity, so the funds never even left Fidelity, which further affirms it was a non-taxable direct rollover. So in short, check to see if we filled out that SEP IRA transfer form for you or if you filled it out, and let us know and we can review it. But it appears that everything is culture here. Okay. Are employer contributions to the solo 401k and a multi-member LLC reflected somehow in 1065 K1, and these are only reported through personal tax return 1040? So good question. Let me send over a link that talks about how to report contributions, both employee and employer, on your tax return, whether it's the form 1065 Schedule 1 here or the form 10 or Schedule 1, which is an attachment to form 1040. Let's see here, contribution, reporting contributions. Let me send that link over. So let's just spend a minute here talking about that. So I just sent that link over. Here it is. I'm hovering over it. So take a look at that. Well, that's not the one. There it is. So one, if you're going to see there, it talks about if the business is taxed as a partnership, it breaks down how contributions are reported. So if we're talking about employee and employer pre-tax contributions, those are going to be reported on line 16. So each partner will file a separate, obviously their own personal tax return, which is Form 1040. So each partner is going to file a Form 1040 and attach a Schedule 1, and they're going to report the employee and employer pre-tax contributions on line 16 of that Schedule 1. And they're also, and then they're also going to report it on Schedule K1, line 13, using code R. Again, take a look at that cheat sheet there. It lays it out for you nicely on a platter there. I mean, we can't do a better job than that. You can even share this with your CPA. Now that's for reporting pre-tax employee and employer contributions. Roth employee contributions, though, those are not reported anywhere. Why? Because they're not tax deductible. So again, take a look at that chart here on that link I just provided. I'm also going to provide another specific page for partnerships. So this will keep you nice and busy here. And that's got a nice video there as well that talks about it. I just sent over that link specific to that partnership page. There it is. So there's two links there that will help further answer your question there. Okay, let's go back up here for some more questions here. Let's see, where we got all kinds of questions here. Here we go. Looks like we got a follow-up question here. Could you please talk about pro rata rule if it affects solo 401k? I have 2 SIP IRAs and 2 Roth IRAs at 2 different brokerages, and also have a 401k with pre-tax and Roth. I was under the impression that to avoid the pro rata rule, I have to combine all those accounts into one solo 401k, but I found out that Roth IRA can be rolled over. Do I need to roll the other? No. So again, the pro rata rule does not apply to Roth solo 401k plans or to solo 401k plans specifically. They apply to IRAs. That is why when we help you to open up the holding accounts under the solo 401k plan, you're going to have a separate holding account under the plan to hold the voluntary after-tax funds. So when you make a voluntary after-tax solo 401k contribution, just the funds in the voluntary after-tax solo 401k plan get converted to the Roth solo 401k or the Roth IRA. Therefore, it doesn't impact your pre-tax solo 401k funds or your Roth solo 401k funds. And it has nothing to do with any IRA funds you have, such as Roth IRAs, SIP IRAs, simple IRAs, traditional IRAs, educational IRAs. None of those are impacted. So again, by having those voluntary after-tax solo 401k contributions flow into a separate bank or brokerage account under the solo 401k plan, you're effectively isolating those voluntary after-tax funds that then get converted over to the Roth solo 401k or the Roth IRA. All right, another question here. I just in-kind transfer my entire SIP IRA account to pre-tax solo account. Both accounts were with Fidelity. Okay, I already went over this one. Okay, let's go back to, let's see here. Regarding my previous comment, my SIP IRA account balance was below $250,000. That's fine. SIP IRAs are not required to file a Form 5500 easy, nor does your SIP IRA balance impact the solo 401k threshold for filing a Form 5500 easy. So if the solo 401k balance is greater than $250,000 as of the end of the year, then a Form 5500 easy needs to be filed. But it doesn't take into account any SIP IRA that you might have. So SIP IRA balances do not impact solo 401k reporting. Now, defined benefit plans do. That is, if you also have a defined benefit for your self-employed business, and then you have a solo 401k for your self-employed business, you have to aggregate the values of both plans. And if when combined together, value is 250, it's greater than 250,000, then two separate Form 5500 EZs will need to be filed, one for the solo 401k plan and one for the defined benefit plan. Also, someone was telling me that the solo 401k is going away. Yeah, whoever you're speaking to, they might not really understand how the rules work. It would be very tough for the IRS to get rid of a solo 401k plan. That means it would probably have to get rid of traditional 401k plans. Otherwise, it would be discriminating. So no, the solo 401k is not going away. Oh, let's see here. Thank you for the clarification. Rules for 2024 contributions. I'm a sole proprietor LLC and have had a solo 401k with Vanguard, now Ascensus. So if I migrated my account to you, I could make 2024 contributions until April 15 of 2025. Just want to make sure I can still make contributions if I open my accounts. You're exactly right. Why? Because you already have a solo 401k plan. So by restating that existing solo 401k from Ascensus over to our solo 401k plan, you're not going to lose the ability to still make contributions for 2024, whether it's employee and employer contributions here in 2025 by your business tax return due date, including timely filed extension. And you're going to be able to also make voluntary after-tax contributions as well for 2024 here in 2025. So no issue if you restate now. Good question. I know that a lot of clients have migrated over to us from Ascensus last year, and they're starting to do so this year as well. Several have already started the process here in January. Another question here. Where can I learn more about pro cons of the backdoor Roth and any options to consider when I move assets from Ascensus to maximize tax liability? Pros and cons. Well, there are all kinds of pros. There are really no cons for a backdoor Roth solo 401k. Why? Because that's a way to really supercharge your Roth solo 401k indirectly. Because it's by use of that voluntary after-tax solo 401k bucket that you can get all the way up to $70,000 in contributions and then move those over to the Roth solo 401k, resulting in $70,000 of Roth solo 401k funds. I mean, if you can't tell me that's a great deal, I don't know what is. I mean, that's one of the best gifts Congress has given to us in a while. And even though they've tried to take it back several times, they've stopped doing that. Hopefully they don't try to do it again. Now that Trump is in the office, I don't foresee that, but I've seen stranger things happen. So, I mean, I can't think of any cons. I mean, maybe the fact that when you make a voluntary after-tax contribution, you don't get a tax deduction now on your taxes. So you're foregoing that. However, you're foregoing that for tax-free growth. If your investments do really well, then you're going to have a lot of tax-free gains once you convert those to the Roth solo 401k. So we don't have any pros and cons posted on our website on that. But again, I can't think of any cons. Let me send over a link about the restatement process from Ascensus over to a solo 401k offered by our company. Maybe this will help you at least understand what the process is. So I just sent that link over. Let's see if I can show you here for a little bit. So there's that link there from our website. In the meantime, let's look at some more FAQs here. We're starting the year off with a bang with all these FAQs. That's great. So I'm interested in buying cryptos. Can I use any exchange, any crypto exchange? You can, but just be careful. Do your due diligence. For example, which one? There was one that, well, there's probably several, but there's one that comes to mind that turned out to be a big Ponzi scheme a couple of years ago. Was it Forex? I can't remember the name of it, but just be careful. Do your due diligence as to which crypto exchange you're using. But yes, we're not the trustee of the plan. You are. So ultimately, you get to decide what to invest in. And of course, with having that type of responsibility, you also run the risk of picking the wrong investments or dealing with the wrong investment sponsor. So just be careful. To clarify, if I open the account in January, then can I still get a $500 tax credit for 2024? Or will my tax credit start with the 2025 tax year? So good question. Any new plan, that means any plan documents that are drafted for the first time here in 2025, that tax credit is not going to be available for 2024. It'll be available starting in 2025. So 2025, 2026, and 2027. You would have had to submit your solo 401k request by December 31st of last year for the plan to have been effective for tax year 2024. So if you're just now submitting a solo 401k request to open up a plan, that is for us to draft plan documents here in 2025, then the plan is going to be effective for 2025 with respect to the tax credit. However, you'll still be able to make contributions to the plan for 2024 if you're making both employer profit sharing contributions and voluntary after-tax contributions. You'll be able to make them for 2024 here in 2025 by your business tax return due date plus extension. Now, and that's if your business is an S corp or a partnership. If your business is a sole proprietorship or taxed as a sole proprietorship, then you can actually still open the plan here in 2025 by April 15 and you can make employee and employer contributions as well as voluntary after-tax contributions by April 15 of this year for 2024. If you open the solo 401k plan and you're a sole proprietorship after April 15 of this year, you'll still be able to make your employer pre-tax contributions, profit sharing contributions by October 15 of this year for 2024. I know Secure 2.0 really muddied up the rules, and there are different rules that apply to each entity type, each contribution type. So that's why it's always best to open the plan by December 31st. That is, request the plan documents by December 31st so that you don't have to worry about, okay, by when can I make a contribution? Because if you do it by December 31st, you're going to be able to make contributions all the way up until your business tax return due date in 2025 for 2024 for all contribution types, employee, employer, and voluntary after-tax contributions. Okay, let's see here. What are the rules for borrowing against funds in a Roth Solo 401k? Well, you can't borrow against your funds. So you can take a 401k participant loan where you borrow from the plan and then you pay it back to the plan, and you can borrow 50% of the solo 401k value, not to exceed 50,000. So you're going to need at least 100,000 in order to borrow the full 50,000, but you can't use your solo 401k funds as security, as a security for a personal loan, for instance. Okay, let's see here. Looks like we got another question here. Excuse me. What about standard trades, stocks, options, loan cash, not naked? I have a Fidelity 401k I'm amending. So does my trading stay the same, just a different account selected? At Fidelity, I use Active Pro to buy, sell X, or is there overhead wiring similar to the crypto process having tendency? So it looks like you're talking about trading puts, futures, options. So I know there are restrictions on trading options with the Fidelity non-prototype brokerage accounts. We'll have to look into that a little bit further. So you may have to open up an additional brokerage account at a firm that allows for trading options as well as futures, for example. I know we have some firms out there that our clients have used. If you send us an email, we can determine who those are. And we can also determine whether or not Fidelity, what type of restrictions Fidelity puts on trading options, at what level that is. How do I get assistance for filling out the required tax documents for my solo 401k? Well, it depends on the type of tax document. So a solo 401k is subject to Form 5500 user reporting. Once the value of the solo 401k plan is greater than 250,000 as of the end of the year. So once your plan reaches that threshold of greater than 250,000 in value, let us know so that we can add you to our Form 5500 preparation list, and we'll file that electronically for you through the government website. It gets filed electronically. Take a look at also at this page here. I'm just sent over a link to that talks about solo 401k reporting. Now, if we're talking about Form 1099-R reporting, which applies for distributions and conversions of pre-tax or voluntary after-tax funds as part of the Mega Backdoor, we have forms that you would fill out online that would prompt us to issue that Form 1099-R, which will issue for those who timely request that Form 1099-R. Take a look at this link I just sent over that talks about the different reporting that applies. Now, if you're talking about reporting contributions to the plan, that would be done by you on your personal or business tax return. And I provided a cheat sheet earlier on how to report those contributions on your personal and or business tax return that you can share with your CPA. But other than that, there's no other reporting that will apply to a solo 401k with regards to distribution and value reporting. Let me send over that cheat sheet here. Here's a link here for reporting contributions on your tax return and or personal tax return. I'll hover over it here. So take a look at that there. So let's see what else we got here. Let me go back up here. Let's see, make sure I haven't missed any questions here. I know there are some I got to look at. Here we go. Looks like a follow-up question. What about standard trades, stocks, options, long, non-naked? I have a Fidelity 401k I'm amending so that my trading stay the same, just different accounts selected, or is there overhead similar to crypto? No, so one, you're going to need separate brokerage accounts at Fidelity for the solo 401k that we offer, and we'll help you through the process. Those are known as non-prototype accounts. Second, yes, you're going to be able to continue to trade equities under those brokerage accounts. What's more, you're also going to be able to invest in real estate, private placements, and promissory notes by writing a check or by wire out of that Fidelity brokerage account, and we can shed more light on that for those that want to do that. We have specific procedures for that. But as far as the whole crypto, yeah, that's separate. So a crypto, you would require a separate bank account to hold the crypto solo 401k funds. So the way it would work is you would have a bank account in the name of the solo 401k. Then you would open up a crypto account at the exchange in the name of the solo 401k. You would then wire funds from the solo 401k bank account to that crypto account at the exchange. But no, for investing in equities, those would be done directly under those new Fidelity brokerage accounts. Let's see here. Thank you for clarifying the pro rata Roth rule. So if I choose to keep my SEP IRA separate from solo 401k, do I need to worry about the pro rata rule? No, you do not. Because again, IRAs and SEP IRAs do not impact the pro rata rule for the Mega Backdoor Roth solo 401k. That only applies for backdoor Roth IRAs, where you do a non-deductible IRA contribution and then immediately convert it to the Roth IRA. So no, you don't have to transfer your SEP IRA to the solo 401k. You can do it now or you can do it later. Let's see what else do we have going on here. if I have non-prototype accounts with Fidelity, how does Fidelity report any gain, losses in those accounts to IRS, as they don't know which account is for what use in pre-tax or after-tax? Well, Fidelity is not going to do any reporting on those brokerage accounts, because those brokerage accounts are opened up in the name of the solo 401k using the EIN number for the solo 401k. That's why it's important that you use the EIN number for the solo 401k, not your social security number, when opening those brokerage accounts. And that's why we walk you through that process of opening those brokerage accounts correctly. And second, these are tax shelter retirement accounts. So the IRS knows, by virtue of that EIN number and the fact that the plan was set up correctly, that it's a tax shelter vehicle. So therefore, you're not going to have to pay any taxes until you take distributions from the solo 401k, if we're talking about a pre-tax solo 401k. If we're talking about a Roth solo 401k, you're never going to pay taxes on those funds because they're going to grow tax-free. And as long as you wait to take them out when you're 59 and a half and have had the Roth solo 401k for 5 years, you won't have to pay any taxes on those Roth solo 401k distributions. All right, so let's see what else we have here. Another question here. I currently have an individual 401k for my LLC, which is taxed as a sub-S. This is held at Schwab. If I sign up with you guys today, am I able to make voluntary after-tax contributions for 2024? You certainly will. Why? Because you already have a solo 401k, number one. Second, we're going to restate that existing plan to our solo 401k plan. Therefore, not only will you be able to still make employee pre-tax and Roth, as well as employer contributions for 2024 here in 2025 by your business tax return due date plus timely filed extension, but you're also going to be able to make voluntary after-tax contributions for 2024 as well by your business tax return due date, including timely filed extension. So that's great when you're restating an existing plan, because you're going to gain access to that voluntary after-tax contribution. Okay. Another question here. I opened a solo 401k with Schwab before year-end 2024. What options do I have to self-direct after making 2024 contributions? So, I presume you're saying you opened the solo 401k with our company, but you're using Schwab to hold the solo 401k funds. If that's the case, then you can start making investments immediately, whether we're talking about equities or if we're talking about real estate or promissory notes. So if you have questions about a particular investment, alternative investment that you want to make and you're a client, go ahead and submit a support ticket, and we'll go ahead and provide you with the rules surrounding that type of investment, as well as a procedure for how to make that type of investment. Now, if you're saying that you have a solo 401k offer by Schwab and not offered by our company, then that's a whole different story. You would need to contact Schwab to determine what kind of investments you can make, but typically you can only make traditional investments like equities. I just sent over that support page to our website. There it is. Okay, another question here. Can I make an after-tax 2024 contribution for 2024 and convert to Roth? How does the Form 1099-R work? Yes, you can make, if you already have a solo 401k plan with this, and you're waiting to do the conversion here in 2025 of voluntary after-tax solo 401k funds, that conversion is not going to be taxable if there are no gains. If there are gains and you convert those, and those get converted also to the Roth solo 401k, then just those gains will be taxable. It's probably not that much. I'm sure there's not much gains. But the 1099-R is not going to get issued until next year, until January, February of 2026, because conversions are reported in the year that the funds are actually converted. So don't confuse the conversion rules with the contribution rules. The contribution rules say you can contribute to the solo 401k by your business tax return due date plus timely file extension. But the conversion rules call for the conversion to be taxable in the year that the funds are actually deposited into that Roth solo 401k or Roth IRA from the voluntary after-tax solo 401k. But either way, it's not going to be taxable anyways. And that's not going to impact your ability to also process another conversion here in 2025 for any 2025 contribution that you make. So you might end up processing two conversions here in 2025. One for the voluntary after-tax contribution that you make for 2024 here in 2025, and a second one for the voluntary after-tax contribution that you make here in 2025, resulting in two conversions in 2025. Excuse me. My mouth getting a little dry here from all this talking here. But hey, good questions coming up here. Let's continue here. So where must the funds for voluntary after-tax contributions come from? Well, just like employee and employer contributions, whether pre-tax or Roth, all contribution types have to be based on your net self-employment income. So if you don't have any or enough net self-employment income from your business to make the contribution, you won't be able to contribute. And you can't contribute more than you make to the solo 401k, whether it's employee pre-tax, Roth, employer contributions, voluntary after-tax contributions. You have to have net self-employment income to support any contribution you make to the plan. Okay, it looks like we're coming to the end of our, let's see here, questions here. Now, keep in mind, we're going to have another webinar today at 1 p.m. Pacific time. So you're going to have plenty of time to ask some more questions. We're doing 2 webinars today. As a matter of fact, we're doing 2 webinars all week. One at 10 a.m. Pacific time and a second one at 1 p.m. Pacific time. So here's the last question here. Is 5,500 easy form preparation cover part of the annual fee? Yes. So we don't charge anything extra for preparing a form 5,500 easy. Keep in mind that our annual fee, as outlined in the agreement for services and all over our website, is for being the solo 401k plan document provider. In order to have a solo 401k plan, you got to have an IRS approved solo 401k plan document provider. That's why our fee is only $125 a year. So we include in that fee, for no additional charge, Form 5,500 Easy Preparation Services for those who timely request it, as well as Form 1099-R Preparation Services for those who timely request it. So you're getting a steal, you're getting a deal. No other company does that type of reporting at no additional charge. As a matter of fact, I already know a couple companies, a couple of our competitors that have raised their annual fees greatly at the end of last year, and a lot of those clients are coming over here. And we've never raised our annual fees since we started in 2009, and we don't foresee doing that. At no additional charge for those clients that fall under our plan, where we're the solo 401k plan document provider, and we charge a flat fee of $125 a year to be the plan document provider, period. Okay, again, thank you for joining today's webinar. We'll have another one here at 1 p.m. Pacific time. I've enjoyed our time here, and we'll see you again tomorrow at 10 a.m. Pacific time. Until then, Happy New Year.